Good afternoon, everyone, or good morning, whereabouts, depending on where you're dialing in from. I realize some people are still dialing in, so if you don't mind, we'll just wait a couple of minutes, and then we'll get started. Okay, let's start. I can see I have the list of signups to today's webinar, and it's absolutely fantastic that some of you are dialing in from Japan, Costa Rica, Myanmar, Romania. It's really fantastic to see, and a great kickoff to this event. So what I would like you to do on a housekeeping note is that as we go through this quick presentation, which will take about 15-20 minutes, I would love for you to write down some questions in the chat window, which you should be able to access. And I'll be very happy to answer those questions when we get to the Q&A at the end of the session. So I'll dive straight in. It was really important for us to bring up this topic during the Mock COP event, because at the root of every company doing business is finance. And it's really important that we take that into account as we look to ways to tackle the climate crisis. So I'll run you through some basics of financing of businesses and companies. I realize that some of you will be at school, some starting university, some starting jobs. So hopefully the pitch will be right, but we can get into specific questions at the end as well. So where do we start? So first of all, you probably know some of this, but I wanted to make sure that you looked at various across industries where climate change comes from, or which industries are the hardest triggers of climate change. Looking at right from the left, obviously not a surprise, energy industries, and by this we're referring to fossil fuels, generating industries, oil, petrol companies, oil companies, etc. Transport, manufacturing, agriculture, industrial processes, and waste. So most of these won't come as a surprise to you. Now, I think one point before we actually get into the finance part of things, let's look at what you can do at your own individual level beyond finance before we even get to that. We can look at ways to change the way we move around. So using bicycles rather than cars. When we purchase an item, look at the labels, look at the company who has produced that item, who's offering that service. Is it a low carbon company? So use your voice as a consumer and change your habits. We already have a very substantial impact, as you can see from the number on those slides. Industrial processes, I mean, you'll have an impact on that by buying less clothing, eating less meat. And if you look at agriculture here, it can have a huge impact to move to a vegetarian diet, of course. So all of these elements are things that we can start by changing in our habits. And that takes us straight to the finance bit, which I'll talk to you about in a minute. So one point that well, not enough as we think of it at Climate Invest, people know, is that when you look at investing sustainably, taking together all the points I've just mentioned, it can have 27 times more impact than eating less meat, which we should all keep doing by all means. But it's a really impactful way to help solve the climate crisis. So investments are not often talked about, not as much as we would like to see, but they have a disproportionately important impact on climate change. So we've just talked about the way you live and your habits, and that's absolutely essential. It's essential because it reduces your impact, but also because it's sending a very strong signal to companies. Businesses want to grow. You're seeing these new ideas, new services all the time. And the way they grow is that they have customers. And those customers are you and myself. And those businesses need customers because that's the way they're going to go to the bank, knock on the bank's door and ask for a loan to help them expand their business. Without customers, they can't run and grow their business. And that's where you come in. And that is so essential. If you look at the logos we have at the bottom of the slide here, Tony's Chocolonely, Patagonia, Beyond Meat, those businesses have completely integrated that they want you as a customer. They want the sustainably minded consumer to buy their products. Now, slightly tongue-in-cheek, it's nearly all about the money, because the money is what powers businesses, and that's what will drive their growth, as I mentioned previously. So just to give you an example, a company is going to see money come in on a day-to-day basis, but in the same way that you're funding your education, for instance, with perhaps a loan, a student loan, companies need money when they have big projects. So building an oil rig, updating their airplane fleet, building a new brand. For all of these new, fresh projects, they will need capital. It's like oxygen to these businesses, having access to money to grow. Now, who has the money? Where is it sitting? And how do the companies reach into that pool of money? So investors can be small, like you and I. You can be an investor with 20 euros in your pocket. You could look at your university, think about your university if you're studying. They will have capital that they're managing, their assets, and they will have deposited it with a bank or an investment fund. Now, your pension, for those of you maybe who are already working, you might be thinking about your pension. If you're not, you should. And all those pensions are grouped together into investment funds, and they become very large pots of money. And you can also think about an investor as a bank, because your current account, your 20 euros, your 1,000 euros, your overdraft is all held within a bank. And banks have access to, yet again, another pool of money. Now, investors, when what do they think about? What do you think about when you decide what to do with your savings, your pension? You think about the risk that you're exposed to and the return that you will get on your investment. Obviously, the theory goes that the higher the risk, the higher the return. How much do you want to see that money back? Do you want a really safe investment that won't pay you very much every year? Or do you want to risk it all on a big tech stock, which, by the way, is not very sustainable? So these are the dynamics that investors find themselves in as a small individual investor or as a large institutional investor. And obviously, the bank or the big financial institution is in the middle between you, the investor, the university, large pools of savings, and the company. The bank decides who the money goes to in terms of businesses. And the company will come knocking on the bank's door, as I mentioned, and will effectively make a pitch saying, well, we're a strong business, but we want to expand and we need money to do that. So could you lend us money? Can we borrow from you, the bank? Or could you help us sell a chunk of our business and we get the cash and investors get a chunk of our business? And that's called an IPO. So a flotation on the stock market, if you like. But really what's important to take away from this is that the bank at this point has the final say onto which companies will benefit from that capital. So watch the money. Make sure you know where the money is going, that flow of money that goes from you, from your pension fund, from your university. Where is it being invested? A few things to think about. Since the Paris Agreements, $2.7 trillion have been invested in fossil fuel companies by banks. And despite what you might be hearing about an awareness around sustainable investing, this amount is rising every single year. And 4 US banks are responsible for 1/3 of that investment. The issue that we face here is that if companies can still access capital, they can still access the money through the banks, why should they do anything differently? It's a very comfortable position for them to be in. They're not feeling the pressure. And that's what we are looking to change. Now, what you and I are trying to do here is to reverse the flow of money, reverse the flow of capital. We want the flow of capital to come out of fossil fuel companies and other polluting businesses into clean energy, green companies, which are providing solutions to climate change. And again, going back to your 20 euros in your pocket or your flat balance on your bank account, all of that matters because that all pools into very large amounts of sums of money, which we need to direct into the right businesses. And that's where also you have a voice, not just with that 20 euros or 20 pounds, but also, so we'll start with the way you can do that as an investor. And really across those three verticals, the impact that you can have as an investor, as a customer, as an employee, it's all about asking questions and being demanding. You can be demanding as an investor by asking the bank who's going to hold your 20 euros or the fund you're choosing for your pension, how are they selecting the businesses that they're allocating capital to? How transparent are they? Do they have a methodology that they're sharing with you? Do they have rules? Do they have quotas? Are they investing in low carbon businesses at all? I mean, all of those, just asking those questions will put pressure on them. Same thing as a customer. You want to open your first bank account. That is such a valuable piece of business for a bank. Young customers opening their first bank account. So by all means, make that count. Ask them questions. Do they lend to polluting businesses? Are they going to reduce their own emissions internally? So challenge them to give you answers. And again, are they forthcoming with those answers? And finally, as an employee, some of you will be just starting work or contemplating a career. As you start working for a bank, a financial institution, or actually any other business, you should ask them these questions. You should ask them if they have a plan to educate employees about climate change, if they help employees reduce their own footprints as professionals and individuals, if they're offering a green pension plan for their employees. All of those questions will really rumble banks, financial institutions, and companies, because they'll feel that in order to get the best employees and to grow their customer base and to have a good brand that's well regarded, they need to answer those questions. And just to reinforce my point, you as a young person, as a young consumer, are incredibly valuable to brands. They want to appeal to you. So you are very, very strong. You have very strong demographics when it comes to impacting these brands. So make the best out of that. I want to touch, before we wrap up, on greenwashing. I know a lot of you will be aware of greenwashing. Greenwashing is effectively making unsubstantiated or slightly misleading claims about attitude to sustainability. And specifically when it comes to finance, it's a very complex area to get transparency in. So if you want to invest your savings, pension fund, etc., in a sustainable fund, you'll hear a lot of that term, ESG, environmental, social, and governance. And ESG is very good in that it means that the fund or the bank or the business are following some principles, some policies, some guidelines about caring for the environment, society, and generally being a well-governed business. It's very popular at the moment. Everyone's dressing up their fund to sound like an ESG fund or to be able to call themselves an ESG fund. You have to bear in mind that while these practices are very commendable, they are not a solution to climate change. It could be that they have a very strong diversity policy, which is fantastic. But again, it's not going to reverse that flow of money into climate change solutions. And actually, you'll find that some claims are straightforward, very misleading. So you'll have an ESG fund that might invest in one petrol company and not the other, because they'll say, well, this one isn't as bad as that one. And it would still be called an ESG fund. So this is just for awareness. You have to keep digging into these claims to put pressure on those using these false allegations or misleading allegations to come clean and to do better. These are a few examples of the coverage that ESG and greenwashing have seen recently. So Boohoo, a UK clothes manufacturer, which has been seen to have very, very poor practices, despite claiming the contrary and being included in a lot of ESG funds. Type ESG and greenwashing online, and you will see exactly what I'm referring to. You'll find articles by the dozen. A lot of companies are using words such as carbon offset, net zero, regenerative, sustainable impact. Again, I would recommend that you dig into those terms. What does it mean? What does it need to be? What does it mean to be net zero? So if a big petrol company buys enough carbon credits, but still is about its business fracking and polluting the oceans, they'll be net zero. But is that the kind of company that you want to see your capital go into? Probably not. In order to really make it count, they have to not only purchase offsets, but also look to change their business model and reduce their footprint. That's what we care about, the trajectory. We want to see that decrease. And it's really important that you challenge those terms, which are thought up by brilliant marketing people and make people feel very good about reading them. But you must go beyond the marketing claims and challenge those terms. Now, a point about the business opportunity, the money that lies in transitioning to carbon zero. You've got to talk the same language as these banks and these companies, saying, well, you know, if you don't shift to a net zero economy, it's a huge risk for your business and a missed opportunity. This is a quote from Mark Carney that he actually said last week in a conference based in London. And it's a really powerful way to illustrate that those companies not looking to transition are facing huge problems in the future. So think about the kinds of risks that they could encounter. Customers like you and me, who are becoming more and more mindful every day of the kind of products that we want to buy or not buy, will stop purchasing these products as we change our habits. It'll be more complicated for them to mine some products out of the ground or to move their goods about unless they have a net zero plan and strategy, because banks won't be so willing to lend them money, because banks themselves, because you're putting pressure on the banks, because you're talking about it on social media, because you're pointing the finger, will have to reduce the amount of money that they lend to businesses who are not transitioning or being shown to take sustainability into account seriously. And that will leave businesses completely cornered. They'll become outdated and they'll be unable to grow. So there's a very, very strong business case for sustainability, and that has to be at the forefront of everyone's minds here, because that's a message that's incredibly impactful when you talk to a bank or a business. Now, I would really like you to, after this session, to think about finance as a force for good. Think about that money flowing into the right companies to make an impact. So it's not about dismissing finance as a cynical tool. It's absolutely essential. It is the engine of the net zero economy. And we all have to be mindful of that and to participate in that process by voicing our concerns, asking all these questions that I've mentioned. By the way, you will be receiving the link to this presentation, so don't worry about if I've covered some of the points too quickly. So it's really up to all of us to make sure that capital is allocated to the right businesses. Just to finalize, several things you can do. Change your habits as a consumer, as a customer. I presume a lot of you are already doing that. And demand from your bank, your employer, from whichever company is selling you goods, and banks are no different. Demand transparency, demand accountability, and challenge what they tell you, because it's very easy to be fobbed off by some attractive terms such as net zero, transitioning, etc. What do they actually mean? What targets do they have? Are they transparent about it? Are they taking it seriously? And you as a young subset of the population are in the best possible position to make a noise about what you want. And that's what's going to drive capital into the right companies. So we've come to the end of the presentation. And I would very much like to take your questions.
Alice, we have one here. It says, which is the least worst bank?
Which is the least, oh, do I have to name names? Oh dear. Sorry, I can't actually see the chat. This is why I can see your questions. The least worst bank. I think it depends where you're based. You'll have, in the last couple of years, if you look online, you will have seen some very sustainability-oriented banks who are rethinking their business model. I know that in Germany, you have Tomorrow Bank. In the UK, you have Triodos Bank, and we can post that in the email out to you. So it really depends where you're located, but you will find some of these neobanks, digital banks, really looking to meet the demand from our market and to address these issues. So it's really on a country by country question.
Yeah, we don't have to seem to have, oh, here we are. There's one. Is there a blacklist of the bad banks, insurance companies and funds? Sorry, I read that really badly.
Thanks, Alexis. I got the gist. I'm sorry, these dogs are driving me crazy. I will just go up a slide if you don't mind. So I think we've got to be mindful of businesses and banks who are not doing a good job today, but want to transition to net zero, to a net zero model. So it's really important that we could blacklist and point the finger at the players we don't want to interact with. Again, it's going to be on a country by country basis. But what you've got to look at is not so much how they're performing today, but if they're serious about changing. And if they are, it's really important that we endorse that will to change, that desire to change. So if you think about Ørsted is an energy company, which is Danish. 10 years ago, they were a very heavy fossil fuel driven business, and now they're a leader in renewable energy. So you've got to, on the one hand, give these businesses a chance to change, but you've got to be ruthless about forcing them to commit to change. So again, it's going to be, I can see how many countries you're dialing in from, so I won't be able to go into every single market there, but take a look at what their current claims are and if they have plans for a transition out of their fossil fuels oriented business model. I'm thinking about those 4 banks in the US who are responsible for 30% of investments being driven to fossil fuel companies.
Okay, do you have any examples or suggestions of companies, funds, specific areas of investment that are taking serious action and not using, well, not greenwashing? Are there any that you're impressed with?
Wondering if we should get Duncan on the line for this. I can see he's lurking in the background. So Duncan is our founder at Clim8 Invest and obsessed with all sustainable companies and for us to invest into them as a fund. Duncan, are you on? Do you want to take that question? Maybe I'm putting him on the spot there. No, I mean, greenwashing is, it's a complex question because you see, imagine you're a fossil fuel company and you want to transition, you want to start that process. You're going to start with 1, 2, maybe 10 items, but it's never going to cover, you're never going to go from 0 to hero in a month. It might take 10 years for you to transition that business into a sustainable business. So on the one hand, it's very challenging when you're a heavily polluting company and you want to do right by the environment, because you have to start somewhere and the likelihood is that it won't be good enough from day one. So it's really on a case-by-case basis. And I'm sorry, because you're all asking me for names of brands and companies, and I'm reluctant to go into specifics because you really have to look, and you think about H&M, for instance, fast fashion. They're recycling their products when you bring them in store. to what extent is that to what extent is that greenwashing? Is this just a way to get you into their store to buy more stuff, or is it a valid and proven model that's going to lead them to be a more circular economy focused business? So there are a lot of question marks. In some cases, there are no right or wrong answers, but I think the point that I'm really trying to make is to ask those questions and to make sure the companies and banks and funds are hearing you, and they know that it's a huge issue for you as a customer to continue to be a customer with that company.
Brilliant. The next one we've got is, what do you think should be the first step to start investing sustainably if you've never done it before?
You've got to find the right vehicle. So it's not about self-promotion here, but you'll have entities in every country that you're calling from, or within your continent, who are really trying to invest sustainably. So one thing that you have to look at is something called ETFs. ETFs are called exchange traded funds. They're like think of it as an algorithm. A green ETF will take your 20 euros and will distribute it within its fund via an algorithm. Now, we're not at Clim8, we're not satisfied with these funds. We think that they're not green as such. They would typically be a fund that would invest in one polluter versus another. So we think it's valuable to have a non-robo advisory. They're called robo advisories, non-ETFs, non-automated investment manager managing the allocation of your funds. Another thing to be mindful of is obviously greenwashing. So what does it mean when you invest with them? Does it mean that they're investing in sustainable companies? So a sustainable makeup company, for instance, is that where you want your money to go? Is that going to solve climate change in itself, or do you want to invest? And that could be a very valid yes, by the way, in terms of where you want the money to go. Or do you want it to go to companies that are looking at the solutions to climate change, which is very much our view at Clim8, effectively investing in renewable energy, investing in sustainable food, in clean mobility, etc. So you should ask the provider whether or not it is an automated fund or it's selected by an investment manager, and what the criteria is. Is the criteria that the companies have a trajectory to meet the Paris Agreement targets? Is it that they invest in only a specific set of industries, like we do along 6 specific themes, for instance? So just make sure that you ask as many questions as you can. And there are no stupid questions. The only stupid question is not asking any questions. And I think we find that challenge every day when we see blanket claims about a green ETF, a green vehicle for investment that holds highly polluting businesses. And the reason that those businesses can exist, those funds can exist, is because not enough questions are being asked.
Amazing. So we got the next one, which is, oh, hold on a second. What are the key industries that big investors should be investing in for good?
Well, and again, this is from Clim8 Invest's point of view. Renewable energy would be an obvious one, because there is such a need for capital into that industry if we're going to meet the targets that we've set ourselves. That again, think about that flow of money coming out of fossil fuel businesses into green industries, and really the core one we should be addressing, and we are with our own portfolio, but we're really doing it at scale alongside other players as well, is renewable energy.
Brilliant. Is there a trade-off in returns for investing in eco funds?
That is such a good question. I'm so glad you've asked that. Thank you. So going back to the point I made about net zero being the biggest commercial opportunity of our time, my answer would be no. It's no, because by investing for the planet or in sustainable businesses, you're hedging your risk. You're preventing your money to being exposed to companies which are going to suffer from climate change because they're already thinking about a net zero economy. So as a matter of fact, we see it, and we would, because that's what we do. We see it as a huge opportunity for strong returns. I mean, you look at our portfolio and other portfolios in the space, which have performed very, very well since the beginning of 2020, because in a way, these businesses have fewer risks. They're less exposed to pandemics or other consequences of climate change, if you look at other potential events. So actually, we see it as very good business to invest sustainably. And it's a shift in terms of the way that investing for the environment has been perceived up until very recently, which was more seen as philanthropy, not expecting a return on your investment, not even expecting to necessarily get your money back, into seeing this as a huge business opportunity. And take it from Mark Carney, who ran the Bank of England for years. He knows what he's talking about, and he's now UN Special Envoy for Climate Change. So no, I mean, it's quite the opposite in our view, and in the view of Mark Carney.
How do we get in contact with Clim8?
Oh, we've got an email address, I think, on the website, I believe, in the footer, hello@clim8invest.com. We'll be, I mean, you know, beyond the investment product that we offer, we really want to engage with ideas and what you need as a young group of people driving, who will be driving policy on climate change. So we're very happy to hear from you, to hear your views, what you want to hear more of, more information, what you need more information on as well. So by all means, do get in touch with us.
Brilliant. I think that's all the questions at the moment, unless anyone else has any more.
All right. Well, I mean, you can always send us your question at hello@clim8invest.com. We'd be thrilled to answer them. Thank you so much for taking the time. We feel that this is an absolutely essential topic, whichever way you think about climate change. Finance is at the heart of it. And we've got to make sure that those trillions of dollars are shifting away from fossil fuels into sustainable businesses. And you can drive that, which is really what I wanted to make sure I put across. Thank you very much for your time.